Hi my dear friends, this is Prasad Vedigar. In my Basics of Financial Planning session, today I am going to continue where I have left in the previous session. So before going to the session, we will see what we have seen in the previous session. The previous session we have seen the pyramid of financial planning. It's a basic structure which gives you a solid basement and then it allows you to go up. Remember, one thing I would like to add to that financial planning is that in this pyramid, build your portfolio by earnings. My dear friends, many think that they can speculate and trade, thereby they can make an earning. Yes, my dear friends, if you are a full-time trader, you can earn money. But if you are part-time, you cannot earn money. You will have more possibilities of losing your money than earning. So that's why I would like to add, if you want to build a portfolio, solid portfolio with a very good financial planning, number one thing is that build your portfolio by earnings, not by speculation, not by trading. You cannot earn money by trading, money by speculation, by being in a part-timer. If you are a full-timer, that is a different story that I am not going to deal now. Here, I would like to recollect the previous session. To start with a solid base, first thing is that as soon as you start earning, see that you have got enough risk cover. Then emergency fund, liquid investment you have to make for 6 months of your salary. Third, you can go for assets like housing or gold or metals. Then third, after completing all this, you can go for high risk investment like capital markets and stocks. So this is what the financial pyramid I am going to cover one by one. Okay, let's come to risk cover. How much risk cover you have to take? It's very important to know that it is risk cover is not a namesake. How much you are going to take? Yes, I have also taken some kind of risk cover, say for 5 lakhs or 10 lakhs without any basis. So you have to have a solid plan for how much risk cover required for my family. It's plain open to that. Risk cover means in case of death of financial person, how much financial or insurance that family is going to get. As simple as that. So in case death of that person, how much that family is going to get. We cannot, as I said earlier, the emotional loss will be there. We cannot replace the emotional loss. But we can always replace to some extent the financial loss. That financial loss is basically the risk transfer to the company. It's called risk transfer. If you don't take insurance, what will happen? You are retaining your risk. It is like a wearing helmet. You wear the helmet and travel in two-wheeler. What happens? You are transferring the risk of getting hit by on road or any other vehicle to the helmet, not your skull. In case if you are not wearing helmet, what happens? You are retaining the risk of getting hit by another vehicle or falling down in road directly to your skull, directly to your head. So there will be much more injury and then fatalities possibilities are much higher. If you wear helmet, it gets reduced to some extent. Similarly, if you are taking insurance, you are transferring the risk, financial risk to the insurance company. For an insurance company, the loss will be very less. But for the family, if you don't take insurance, it will be a big loss because you are one family. For an insurance company, it is a business proposition. They are going to make profit or loss, most likely in all the time profits only because of their underwriting. So that is our business, part of business. It doesn't affect the company. But if you don't take insurance, your family is going to lose you, and then as well as there will be a financial loss also. Isn't it, my friends? So with this premise, let's go into the topic how much insurance cover is required. It is not just like a ballpark idea or the vague assumption how much insurance is required. There is a time tested formula for it. So that's what we are going to say in a very simple terms. We are not going into any mathematical explanation to you, but I will try to make it a very simple one. Here, my dear friends, the risk cover is to be calculated by human life value calculator. It is a time tested method. Most of insurance company and salesperson and certified financial professionals teach you about human life calculator. I am just going to tell you the overview of it, not get into in-depth like a course. What is human life value calculator? What are all the parameters you have to take into consideration while calculating the insurance cover required? So let's see. Human life calculator is, it is just a calculation of present value of future income required. So in this, the parameters are age, annual income, existing cover, how much savings you have, then how much liabilities you have, then expenses, household expenses. These are all the parameters required to calculate. It is a very simple one, but the formula is bit complicated. So we will take it a simple one, because I don't want to, as an LIC prospective policy holder, as an investor, so you should not be confused with the formula, but you should know the basics. So how the income, how much the risk is calculated, you should know about it. My dear friends, I'll go with the example. Age 35 years, annual income 25 lakhs rupees, existing cover he has got 10 lakhs rupees in some source, either by self or by his company, and then he has got a savings of around 5 lakhs rupees, home loan and other loan comes around 30 lakhs rupees, and then whatever the income, expenses, say monthly expenses, say 50,000 rupees into 12, 6 lakhs rupees is the monthly expenses. You can say monthly loan and expenses 6 lakhs rupees per year, minimum of minimum. So in order to, in the absence of that person X, something happens to him, so how much money is required to maintain that family in the similar stature, financial stature? That's what this calculation is all about. This is called income replacement method. Income replacement method, how much income is required, take into consideration of the inflation as well as the number of years left service. In this case, he is a 35-year-old person, so he has just started his life or family life, assuming 35, another 25 years will be his working years, considering if he is retiring at the age of 60. So another 25 years, he has got a family to support, he has to support for another 20-25 years. So how much income is required in order to get this same 25 lakhs rupees? So minimum of minimum, by going by that calculation, he must need, that is the calculation behind it, 24 crore 88 lakh 67,649. I am not going into too much of calculation how I arrived at it. There is a formula for it. So if required, please comment, put it in the comment. I will just share you the formula how I have arrived it. So this 24 crore 88 lakh 67,649 rupees is the minimum amount required for his family to sustain the same kind of financial status even after the unfortunate event. So 24 crore. So 25 lakhs is the sum assured, and then 24 crore is required. Almost 100 times, that's what it says. So let's come to that, how much is in fact required, but this is the calculation about by human life value calculator, HLV, for income replacement method. There is also one more method, my dear friends. It's called expense replacement method. So there is the income replacement method, then expense replacement method. In this expense replacement method is slightly different from the income replacement method, because we have to take the current value of income and then how much is extrapolated to how much income required in future years, then applicable interest rate. There is a, what is the interest rate? 1 plus R, this is the formula, 1 plus R divided by 1 plus inflation rate, close bracket, and minus 1. So this is the formula for it, and then the present value adjusted for inflation rates and adjusted liabilities. So this is a quite a bit of a complicated one than this income replacement method. So basically this expense replacement method is a bit higher than income replacement method. So expense replacement method, it will go somewhere around, you will have to add the what is the future inflation, how many years required, or how much expenses will increase. So based on which this expense replacement method is there. It is a theoretical one, but we always recommend this income replacement method to better have. Still, it comes around somewhere around 25 crore rupees. So this 25 crore rupees you must have minimum of insurance if you are earning this much amount, 25 lakhs rupees. Otherwise, the best thing is that you can go for term insurance plans, so which will support the minimum premium and maximum sum assured is there. You can always go for whole life plans. So different kinds of plans for different people and different risk taking ability and how do they see the term assurance plan. And then if they want returns, fixed income returns for 100 years, there are different plans are there. So I would like to go that explaining about the plans in the next session. And basically I would like to say, if you would like to have income replacement method, it's always go by term assurance, you can always take. Otherwise, if you want a return of money, so you can go for a normal endowment plan or any other whole life plans. That's what I would like to say, my dear friends. Friends, when it comes to risk cover, I strongly recommend you that you have to go by certain parameters, but not to go by the vague assumptions or just a ballpark idea of how much risk cover is required. As I said in the human life calculator, you have to consider the parameters like what is your age, what is your income, annual income, how many years you are going to work further. If you are 35 means another 25 years you have got a work period. And then what are your liabilities, how much loans you have got, what is the personal expenses, educational expenses. So considering this, how much money is required in case of something happens to that person, how much money is required to take care of the family. This is one of the important parameters. As I said earlier, there is the age, income, how many years left, service left, then liabilities, loans, expenses. So all these factors you have to consider and come for conclusion. We always say this, go by human life calculator. But human life calculator, it is not easy every time go and calculate. I would say that minimum of minimum, you should have 10 times of your annual income. So 10 times of, if this person has got 25 lakhs insurance, you should have the barest minimum 2.5 crore rupees should be your insurance cover. Otherwise, you can always increase it to 100 times. So that would take care of your income replacement. As per the income replacement, it would take care of your family for certain period of time. Friends, during this COVID time, I would like to add one more important point. Because in COVID times, we are all susceptible to get infection despite being a very cautious and wearing mask going out. Because of our work or family commitments, one or other way we have to go out, interact with the people around. So in that case, it is not a crime to get COVID infection. But as long as you are not getting infected, getting insurance or life cover even to the minimum of 1 lakh to any other amount, there is a normal process which you have to follow. But you know that nowadays COVID infections are mutating every day, and then it's affecting lungs. Some people are getting heart attack even after getting negative reports. So the LIC of India, what it has done, different protocol, different parameters for the person who is not infected till date and then the person who has infected getting recovered. So in that case, if a person getting infected and then getting recovered, so LIC has stipulated certain conditions. A, 3 months waiting period. 2, he has to go medical examination, chest x-ray, and then the physician who has treated you from his report, all this will be taken care, and then this report along with your proposal will be sent to our headquarters at Mumbai. So what will happen that even if you want to take insurance, if you got recovered from the infection, these procedures have to be followed. And then only the acceptance or rejection decision will come. So I would strongly recommend that if you think the adequacy of your insurance is far less than what I have recommended here, even less than minimum of 10 times of your annual income, if you are not done insurance cover adequate insurance, now is the time. Please call up, then comment. I would send the advisor to you in order to get you adequate insurance. So signing off, this is Prasad VR. Please do like, comment and subscribe my channel. Thank you so much.